Yeah, so I would be cool, calm, collect, but leaving my stop loss right here because price is showing me that it's a valid level that price is respecting, right? So when price came back through here, excuse me, and then failed to close below that fair value gap, it's like, oh yeah, I'm gonna leave it right there. I'm not turning the alert off because if price does come back down and slice back down below it again, then it's probably a good chance that it's trying to reverse and it's just gaining steam to do it, right? But being the fact that it pulls straight back up here, I know that I'm cool to leave my stop loss right there, right? And then you see the whole time I was trading for the rest of the day. So this happened at what? At 10:05, right? You didn't have to take profit up here until what is that? That is 3:40. Oh no, it's not. It's not. It's 2:40. Excuse me. 2:40. You didn't take profit until around 2:40 or something like that, right? So that means from 10, 11, 12, 1, 2, 4 hours, price never came back down and hit your stop loss, right? So you got your phone in your pocket. You never got alerted. You never had to come back and check on your trade. You were good, right? But let's say you did come back and check on your trade, right? And you saw this 5 minute fair value gap right here. But let's say price was up here when you noticed the fair value gap right there. What am I gonna do? Like, okay, now that I know that we have a new fair value gap, I'm gonna draw this one and I'm gonna take my stop loss from down here and I'm gonna put it at the bottom of this fair value gap because price should respect it. If price slide right through it, then it's probably reversing. And now also, if price come back down and stop me out, it'll stop me out in profit because I got in all the way down here. You feel me? So now I could walk away from the chart, have my phone in my pocket with my trading view alert set, and not even worry about it. I could go on with the rest of my day, and I know as long as I never hear that alert, I'm good. You feel me? Because I'm already in profit, right? So now you see price went up, it came back down, retested that fair value gap, never triggered your stop loss, right? And then rocketed higher, right? So by the time you came back and checked on it, let's say you came back to check on it around like 2 o'clock or something like that. You're like, oh, all right, we're coming up on power hour. Let me check to see what the market is doing to see if I maybe want to take profit or if I want to possibly add to my position, whatever the case may be, right? And then you notice like, oh damn, price did pull back into that fair value gap, but then look how it kept on going. So now it's adding positive reinforcement to your trading strategy because now you know that it works, right? So now going forward, you'll be more comfortable to actually use it with whatever strategy you're already using. You feel me? So even if you don't use the whatever strategy you're already using, you can still blend in fair value gaps to help you one, stay in your trades longer, or two, even enter trades. You feel me? Because let's say you wanted to catch this break right here, but you couldn't. Let's say your order just didn't get filled or something like that, and then you watching it rip and you sick, right? But you know it's a fair value gap right there. So you like, okay, cool. I'm gonna set an alert for right here at the top of this fair value gap, and if price ever touch down into it, I'm gonna be looking for an entry, right? So price dip down here into it, you could have found you an entry somewhere in there, and then you would have made money. You wouldn't have had the entry from down there, but it doesn't really matter. You still could have caught the entry from down there. Actually, you could have even caught an even lower entry. You could have went down to the 1 minute and found an entry because this is the 5 minute, right? So all of this wick right here, I'm sure that there was at least a minute somewhere in there where you could have found a strap pattern or something like that, or a market structure shift and entered into that trade somewhere down here, even lower than what you would have initially got in at, right? And still made money along with the trade. Or you could have gotten in down here on this 2-2 reversal. You got a 2 down, 2 up reversal out of the fair value gap, right? So not only does fair value gaps help you stay in your trades longer and make more money, but it also gives you entries as well, right? And it can also give you an exit. So if, let's say, example, price ran up here, and let me just use the arrow so I can stop using the mouse for real. Path. Let's say um, you got it somewhere down here, price ran up here, created that fair value gap right there, right? And then price came through the fair value gap and closed down there. I'm getting out, me personally. Why? Because it invalidated that fair value gap, right? And if it's invalidating the fair value gap, that's telling me that sellers are really strong, right? Because they're pushing straight through levels that price should be respecting, right? So it would give you an exit from your trade. So if you were looking for like somewhere to get out, right? Let's say you got in right here, but you didn't want to hold your stop loss all the way down there because literally at that point you're just watching yourself lose. Like, well, my stop never got hit. Yeah, it never got hit, but you know you're losing. You feel me? Like, you got in right here, Price started going up. You left your stop loss down there at the swing low of the market. You see price coming back down. It broke through that fair value gap. Get out of the trade. You feel me? Because if it's invalidating that, by the time it get down there, the only thing that will have happened between here and here is you losing money. And if that's what you want to do, by all means, do that. Me, I'm getting out. Um, let's see. Let me see if I find an example of a bearish fair value gap because they work the exact same way. It's literally the exact same thing, bro. Okay, cool. Boom, found one. Easy. We got 1, 2, 3 candles, right? So we got that 3 candle pattern, right? We're gonna draw our fair value gap. So I'm turn my magnet back on, make my life easier. Boom to boom. Then we're gonna make that red because it's a bearish fair value gap. Stretch that out. Boom. What do we got? That 3 candle pattern, right? 1, 2, 3. This wick and this candle do not touch, right? So boom, this one, and boom, this one. Those wicks or the bodies of the candle do not touch each other, right? So that is a fair value gap. And what had happened? Price came up into that fair value gap as we were dropping, filled that fair value gap, and continued dropping, right? It's the same thing. So boom, you can see if you went short from up here, boom, price was dropping. It started retracing a little bit, shook some people out of their trades. Some people closed out. Some people got scared. Some people probably thought they called the bottom of the market and entered bullish. Whole time it's just filling the fair value gap, and boom, they get clapped. Price continues back down to the downside, right? So basically, that was just more money to be made right there in that situation, right? Because let's say you got out, like the lowest it had got was right here, right before it filled that fair value gap. So that's 559.72. It pulled back up into that fair value gap and then got as low as 559.10. Now mind you, it's only 62 cents, but I mean, hey, if you don't have a reason to get out of your trade, that 62 cents matters. You feel me? Because it's like you leaving money on the table, and it's okay to leave money on the table, but if you don't have to, why do it? You feel what I'm saying? Like if you in a trade and you see the fair value gaps right there, and you got your stop loss set at the top of that fair value gap, notice you never got stopped out. Your alert never got triggered. You feel me? And even if it did get triggered, you notice to let the candle close first because it might pull all the way up here or pull back here and close or something like that, right? You see this candle is a strong full body momentum candle, no wicks on it whatsoever, right? And it still turned around and dropped, right? So you got to really be in control of your emotions when it comes to this trading stuff, because if you're short and you see a candle like that, I'm going to be honest with you, I was a new trader once myself. We getting out, you feel me? And if we not getting out, we sweating, we panicking, we praying, we hoping it comes back down. Like, no, just go back to where you were and I'm going to get out, I promise. And then it never gets back down there and you were in a trade that was up 50% and you got out red or something like that, you feel me? It happens to the best of us. Don't think you're the worst trader in the world if it happens. You just haven't learned enough yet, right? So that's part of why I'm here to help get you to that point. So that's pretty much fair value gaps in a nutshell, right? So you can use them for entries, for exits, and to hold your trades longer to targets, right? Now, what I want to go over is order blocks. So an order block, also known as change in state of delivery, CISD, is basically like the last down close candle or series of down close candles before expansion to the upside. Change in the state of delivery occurs once the opening price of the down close candle is traded through, right? So let's say we got this down close candle right here, right? Which this is. It opened right here at the top of this yellow line, right? So once price opened up right here and traded through the open of this bearish candle, that's now a bullish order block, right? A change in the state of delivery because price was being delivered lower, right? But then price turned around and delivered higher. So that's a change in the state of delivery, meaning there was, hold on, I don't know what that is. How the fuck I turn it? Okay. That means that there was a bunch of buy orders entered the market at the same time, right? Which is why they call it an order block, right? And then the same thing for a bearish order block. the last up close candle before expansion to the downside. So this would be expansion to the downside, right? And this would be price being delivered higher, right? This is where the candle opened at, right? So once price traded through the open of that candle, it went from delivery being bullish to delivery being bearish. So we had a change in the state of delivery, aka an order block. That's all really an order block is. I know sometimes people like to overcomplicate it, but I promise you this trading stuff is as simple as you let it be for yourself. Um, so let's revisit that one that we were talking about earlier. Let me see. Did not mean to do that. Back to SPY. Alright, so it was up here. And this fair value gap up here. Now remember, I said it can be a series of candles as well, right? So, actually, I'm gonna get rid of that blue line. I put that in the wrong spot. I just put it there so I can remember where it was. Here, this red candle right here. Here's where it opened at. Dang, I turn the magnet off. That little magnet be pissing me off sometimes. This is where that candle opened up at, right? Boom, right there at that white line. So it opened up at 564.33, right? So price was being delivered lower, right? We got three candles right here, right? So we got price being delivered lower here, price being delivered lower here, price being delivered lower here, right? Excuse me. And then what happened? Price turned around and delivered higher, right? And it also traded through the open of the last down closed candle, right? So we had a change in the state of delivery, aka a bullish order block, right? And what did we see happen? Price ran up, right? So that's pretty much a bullish order block right there. I want to find a better example though. I want to find one that you could have used possibly to like trade with or something like that. I want to find a nice bullish example. I probably got to go further back in time to find a nice one. Like a bullish order block. Something where price dipped down into it and then bust up. Okay, we might have found one right here. Okay, yeah, that's perfect right there. I'm going to draw it out. This whole little area right there. And I'm going to tell you why as well. I'm going to change the opacity of this joint. Hold on. There we go. Alright. So, boom. What we got? We had a down close candle, right? Followed by a change in the state of delivery, aka a bullish order block, right? So what happened? Price came back down, dipped into that order block, right? And rocketed off, right? That's how you know it was a valid order block. When price came back down and retested that order block, what happened? It rocketed off. Why? Because what an order block is like there's a bunch of like buy orders entering the market at the same time, right? So when price comes back down here to this area, they don't just close out of their trade and get out. Those buyers are still there, right? So if they thought that this was a good place to buy, when price returns back down here again, what do you think they're going to do this time? They're going to buy again, right? So now you got even more fuel. And look how much of a run you could have caught had you waited. Like, see, this is why PD rates can be so important too, because they can also help you be patient. You feel me? Because you could see this day, like after it fell, like that was the move. It was pretty much just choppy for a while, right? Now, if you wanted to find a move, you could have just been like, all right, you know what? I'm gonna set an alert right here at this at this order block, and if price entered into this order block, I'm gonna look for entry to go long. You feel me? But you don't have to sit here and stare at the screen and try to find yourself an entry just to get a trade in. You feel me? We only want to trade high probability trades. We're not trading just for the sake of doing it. We're doing it to make money. You feel me? So if it's not a high probability setup, then don't take it. You feel me? Like, you wouldn't go fill out a job application for a job that you don't want to work for. So why put your money up on a trade that you don't necessarily want to be in? You feel me? You only want to trade good setups. So if you set put your alert right here for this order block, and then price comes back down and dips down into it, now you can wait and find you a setup somewhere in there to go to the upside. You feel me? And if you did that, you caught all of this from down here to all the way up there. You feel me? Just solely off of patience. You feel me? And solely off that order block right there. And mind you, this is the 5 minute time frame. You feel me? So when people say like, oh, there's only like you should only be using the 15, or you should only be using the hourly, you should only be using the 4 hour. No, that's none of that stuff is true. There's a billion and a half ways to make money in the stock market. You feel me? You just need to find a strategy that works for you. You feel me? So while there's some mentor out there teaching you like, yeah, I don't trade on the 5 minute. The 5 minute is ghetto, yada yada yada. You get clapped on the 5 minute. I guarantee you, there's a trader out there that knows how to use the 5 minute and smaller time frames, and I know for sure because I'm one of them, right? Who would have taken advantage of this and made all that money, while somebody who's on the 15 minute time frame probably just caught this, while somebody who trading the 5 minute caught all of that. You feel me? So never sleep on nobody. Never sleep on their strategy, and definitely make sure that you're open and receptive to learning new things. You feel me? Like, I learned all that EMA stuff when I first started trading. I learned all of that RSI, oversold, overbought patterns, flagging, bull trap, all that. I learned all of that stuff. You feel me? But I'm here now. You feel me? But I'm here now by choice. Like, I could have just took like the moving averages, EMAs, RSIs, and 4,000 different indicators on my screen and been like, you know what? No, I'm gonna make this work, and I'm not trying to learn nothing else, right? I could have did that, but it was like, yeah, nah. Like, I know that there's more to this. I know I can be better at this. You feel me? So I learned more information, right? It's just like with any other profession, you gotta think about it. Like, when you're trading against some of the smartest minds in the world. You feel me? And not only that, but you're trading against algorithms, computers. You feel me? So like, think about how many times a human is gonna lose to a computer. A lot more times than not. You feel me? So that's why you, in order to be successful in the stock market, you have to be a part of the top 10% in traders. You feel me? Average is not profitable in the stock market. You can't be average and be profitable. It just doesn't work that way. You have to be top 10% in order to be consistently profitable, right? So you have to learn more and more how to trade like these algorithms if you want to make money with it and or beat it, right? Like, it's a computer. It knows how to beat you. You have emotions and stuff like that. The computer doesn't. You feel me? When the computer's losing money, it ain't tripping. They don't need to pay no bills or nothing like that. You feel me? You human. When you losing money, you tripping. So the computer gonna beat you every time. You feel me? 9 times out of 10, unless you learn how to trade like it, which is the 10% that make it, right? So that is a bullish order block. Now let's find us a bearish order block. I want to find a good one. Find us a good one. Where price? Oh, I think I found it. Damn, I hate it when that shit happens. I accidentally pressed the zoom out. Alright, so let's see. I'm gonna find a nice one. That was kind of decent, but it's not really like a great example. I want a great example. So I need to find where price is running at before it rejected and started falling. So let me refresh this right quick. Let's see if I can. Ooh, got one. All right, so right here, right? You see we had these up close candles right here, right? This is also an up close candle. This red 2 up, it's just a failed 2 up. Well, it's not an up close candle, but it's an up candle. You feel me? So we had 3 up candles right there. Price was being delivered higher, right? And then what did it do? It turned around and delivered lower, right? So now, what does that mean? It means we have a bearish order block right there, right? And then we could see what happened. let's say you wanted to short, but you didn't catch that right there, and price is dropping, and you're like, damn, I really want to catch this move. You see at the end of the day, right at what is that, 3 o'clock? Yeah, right at 3 o'clock, you're like, oh yeah, price tapping right back into that bearish order block. If you got your alert set, and all you doing is waiting for a reversal. You feel me? You see like, okay, cool, we got a reversal right here. I know that we in this bearish order block as well. I'm shorting. You got in up here somewhere at, look, you see how the reversal literally happened right there at the order block. It literally happened right on the order block. You feel me? So it went from 560.95 down to 558.71. So you call it like a $2.20 move with like the last hour of the day. You feel me? I mean, not even the last hour, because these candles are 5 minutes. You feel me? So the last 10 minutes of the day, you caught you like a $2.10 move. You feel me? And then premiums are so cheap at the end of the day because the contracts are about to expire. So you might find you a contract that might only cost you like $60 to get into on SPY at like 350 or something like that, like 3:50 p.m. You might find a SPY contract right at the money for $60 or something like that. And if you catch a $2.10 move on a $60 expiring contract at the end of the day on SPY, premiums can really pop. I'm talking about like from $60 to $300 real quick. You feel what I'm saying? Like, because you gotta think like price is so cheap, right? But if the you gotta think about how options contract premium actually works. The higher the chance of the contract closing in the money, the more premium that there'll be, right? The higher the chance of the contract going in the money, the more premium that there'll be, right? So even though the contract is about to expire at the end of the day, but the last 10 minutes, there's a good chance that those contracts could expire in the money. So the premium's going to shoot up. You feel what I'm saying? Like they might double or triple in that last 10 minutes that you're trading it. You feel me? And then you caught a $2 move. So your contracts definitely went in the money. So you didn't even have to worry about theta either, right? So that's just the power of learning like order blocks. You feel me? So now it's like, okay, I got fair value gaps. I know if price, is running in my favor and I got a fair value gap, I have an idea where I can set my stop losses at, and what price might do when it gets down into it, right? And I could even add extra to my trades when it gets down to fair value gaps, because if I got in below it, when price gets down into it, I could add another contract if I want to, once price gives me a setup up out of the fair value gap. You feel me? So now it's like I'm adding extra at good spots. You feel me? So now when I want to take my initial profit from my first contract, I could take it whenever I feel like it. You feel me? Because I got another contract that's in there that's gonna continue to do the dash for me. So now it's like if I put up $100 on a trade, right? It's like, okay, cool, it's going great. I'm up 30%, so I'm up $30 or something like that, right? And then I get into another contract, let's say for like $50 or something. Once my $100 contract reaches 100%, and I made $100, and I got another $50 contract in there, I can close out my $100 contract and take the 100% off the table, because not only did I make 100%, but now I'm just playing with house money. You feel what I'm saying? Because the extra $50 that I put up, the first trade already paid for that. If I lose this $50, I still walk away with $50 profit from the first trade. So now the second trade is really just house money. I can leave that trade to run and do whatever it's going to do, and I don't have to check on it if as long as it's not hitting my stop loss. You feel me? Because I'm already in profit. So this is how you make it easier on yourself psychologically as a trader. Because believe me, we go through the same things that new traders go through. It's just that we've built systems to be able to manage our emotions. You feel what I'm saying? Um, so that's fair value gaps and order blocks. Did you have any questions about any of that stuff before I go over the ER strategy? I can't hear you if you're talking, by the way.
Yeah. Now I was getting back to the screen to yeah. So now I pretty much was following on that as far as questions. We don't run over it, before. So
Yeah, me and you went over a
um
couple of times, so I definitely get it if you don't got no questions. But just try to think like a new trader for a second. Like, what would you, if you were a brand new trader, right? And this was like just sounding like foreign language to you. What's a question that you would probably ask?
question they definitely probably would ask would be, even though you stated like entry, but trying to increase their confidence on them just knowing, like far as like where they actually really enter. and to really know the answer, what would you how would you break that down to them?
What I would say is study our resource channel because the strat is perfect for entries and perfect for exits as well. So if you can pair up the fair value gaps and order blocks along with the strat, then that gives you your entries, your exits, your whys and why nots, right? So, for example, we have a let's see, we got this bullish fair value gap right here, right? So if you know the
Mm-hmm.
strat, right, it's like okay, price pulled down into here into this fair value gap. So I know that I'm looking for a reversal back bullish, right? So I got this two down candle right here, followed by the two up, right? So that's a 2-2 bullish reversal. So your entry could be right there, or you could even slice down to the 1 minute and find a smaller time frame entry because you might find a 2-2 reversal on the 1 minute. You might find a 2-1-2 on the 1 minute, or if you feel safer trading on the 5 minute because it's a higher time frame. So you like okay, yeah, it's like you know more of what the trend is doing rather than like the moment is doing because the 1 minute is like literally like the moment. You feel me? Like you're gonna see every single pullback, every up, down, red candle, green candle. You're gonna see everything because you zoomed in super close. You being nosy basically, right? But if you zoom out to a higher time frame, then you'll start to see less of that back and forth, right? So you take this entry right here. It's like okay, cool. I'm in this trade. I could put my stop loss at the bottom of this fair value gap, and then you chilling, right? Your entry came from the strat though, and then your target was just closing the gap. Or if it's the strat, 2-1-2. So you would go to a higher time frame or something like that, like maybe like the 4 hour, and then maybe see if you could
Mm-hmm.
find like a 2-1-2 setup, right? Because you might be in the middle of a higher time frame setup, right? Like right here might have been a 4 hour 2-1-2, right? So now the high of the 2-1-2 in the 4 hour pattern, right, might be right here. So while you end down here, your target's up here. So sometimes you got to zoom out to the higher time frames and use those. But the strat teaches that as well, full time frame analysis. So I would definitely recommend that they hit that resources channel and go through those different strat videos that you know were created, and then there's some on YouTube as well that they can watch as well. But they're also in the Discord. You feel me? Like I didn't leave no guesswork. I didn't leave nobody to have to go and search for the stuff on their own. All the videos that I watch and that I stamp are in the Discord. You feel me? So the same education that I got, you'll be getting too.
Gotcha,
Yeah,
gotcha.
good question though. So that's fair value gaps and order blocks, pretty much in a nutshell. But there are videos that are going to be in the Discord that goes over this stuff more in detail. And as you get more and more advanced as a trader, you'll start to see different ways that you can use this stuff. Like really, I'm just giving the basics to it right now because I don't want to overwhelm anybody with information. Like a lot of this information to the traders in the Discord is going to be brand new information because I've only taught the strat there so far. So bringing in ICT is going to be like I remember when I first started learning ICT, like, man, like, I felt like I was dumb, and I know I'm not a dumb person. You feel me? It's just like, man, I don't feel like I can get this shit, man. I'm ready to say fuck this shit and just go back to trading the strat. You feel me? But it's like, I'm not one that's just gonna take a L. You feel me? You gotta give me that L. I'm not gonna take it. You feel me? If I fall down, I'm gonna get back up and try it again. So I went back and I kept learning it until I started getting it. You feel me? That's also why I mentioned like you're gonna have to watch some of these videos more than once, just like I had to. You feel me? I even still do it to this day. Some videos I have to watch more than once. So don't get down on yourself if you find yourself watching this video more than once to try to understand something, or if you feel like you got an understanding of it and you try it and it doesn't work. Just continue to study. It'll click. I promise you. You will get it. The only way you won't get it is if you quit and don't try. So let's go over the ER strategy and then we're gonna be done for the day, right? So earnings reaction strategy is super simple, right? So we don't gamble earnings, right? That means we don't try to guess which way it's gonna go the night before and try to jump in and catch a 1,000,000% move because it's literally 50-50. You feel me? Like you wouldn't take $100 bill and then take ball it up and then throw it through a fire pit and say like it's a chance that it might come out on the other side just fine, and it's a chance that it'll go into that fire and get burnt up, right? You wouldn't do that. So why would you gamble the earnings? It's literally the same thing. You gambling the money. It's either it comes out on the other side good and you can spend it, or it burn up and there's nothing you can do about it. You feel me? Because 9 times, well, 10 times out of 10, the stock market is closed when earnings report. You feel me? So if you're on the wrong side of it, by the time the market opens up and you get out, you already down 90%, and you can't close your trade because your contract is going to expire worthless. And even if you have more buying power to trade something else, your psychology is screwed for the day, because now you got that big red 90% loss on your screen that you can't make move because you can't close the trade because it's going to expire worthless. You feel me? So now you got to try to pull your mindset together to go find another trade and then get into that trade. And then you better hope that one don't start losing too, because now you're down 90% on that trade, and now you're down on this one too. So your whole screen is red. You feel me? It's going to definitely mess with you. You feel me? So do not gamble earnings. It's just not worth it. You feel me? It's not. I don't care if you win. If you win, that's even worse, because now you have like convinced yourself that the bad habit that you have is profitable, and it's not. Right? So what you want to do is you want to go to extended trading hours, right? And what you want to do is you want to find the last 30-minute candle before price opens at 9:30, right? So this candle right here would be the 9 a.m. to 9:30 a.m. pre-market candle. This is where price actually opened up at 9:30. This is where this candle closed at 9:30 before the New York Stock Exchange actually opened. This is the AM trading session, right? This is that pre-market, like before bell trading happening right there, right? So you mark out the high and the low of that last 30-minute candle. Whichever side price breaks to, you trade that side, right? So once price broke the high of this, I'm taking calls, right? And the strategy is meant so that way you catch 150 to 200% of the stock's ATR, right? So the stock's ATR is $4.29. So in order to find 150% of that, you know 100% of it already is $4.29. So now all you gotta find is the 50% part of it. So now what's half of $4.29? It's gonna be like $2 and like what 13 not 14 $2 and like 14 cents. You feel me? So you add $2.14 to that $4.29, and that's how much you expect price to move. You feel me? You add the 100% plus the 50%, and you get a number like, let's say, $6 and whatever. It's gonna be between $6 and $7, and that's what you expect the stock to run when it opens up, 150 to 200% of its ATR. So it's either gonna run the full $4.50, right? It's gonna run like the $6, $7 and some change, or it's gonna run a full 200% of its range, and it's gonna go that whole $8 and 50 some cents or 60 some cents, whatever, right? So as you can see, when we opened up, right? Price opened up right here. So this is what I do. I'll mark where it opened up at, right? And as soon as I mark where it opened up at, boom, once it break right there, I'm in. Now I'm doing the math to plot out my target, right? I'm seeing it opened up at 38.51. Okay, cool. I'm gonna add $4.29 to that $3.58.51, which will take us to $42.70 it'll be $42.80, right? So boom, I already know $4.80 upwards is where I'm looking for, and then I also got to add the 50% as well, right? So now I got to add the extra $2 into it. So now I know I'm looking for somewhere around like $46 is gonna be my target, right? Now of course I'm gonna actually do the math, pull out the calculator and everything like that, and do the exact math. But it was probably somewhere up here, right, where your first 150% of the range ran, right? And then it even went on to run more than 200% of its range, because its ATR is only $4.29. It ran $12, so it ran 300% of its ATR, because 4 times 3 is 12. So it ran $4 3 times, right? So it ran 300%. So if you'd have taken this break right here from 38.98 and took it all the way up here to 50.55, man, a $12 move on a stock that only costs $38 before it did it, and its ATR is only $4 and some change. We're talking about well over a 1,000% trade. You feel me? And you didn't even have to hold it for the whole day. This is the first 30 minutes of trading right here. So that means market opened up at 9:30. You got into your trade at what, maybe, let me see. No, we're gonna slice down into this because I want you to see just how powerful and crazy this strategy really is. Like how fast you can print money and move on with your day and do something else, right? So look, price broke in the first minute, right? 9:31. Price had already broke out of there, right? So from 9:31 until 10 o'clock, price ran up. From 9:31 until 10 o'clock, literally. You just saw it with your own eyes. You feel me? From 9:31 until 10 o'clock, price ran. You feel me? And it ran from your entry 38.98 just to right here. We're gonna go with 48.53. That's still a $10 move. That's a $10 move in 30 minutes. You feel me? You could have made your weekly paycheck in 30 minutes and then got off the charts and went and did whatever you wanted to do with your day. You feel me? Because you just made a week's worth of your salary. You feel me? You just made, if you put up $100, you get 1,000% return. You make $1,000. You feel what I'm saying? So if you just made $1,000 in 30 minutes, you don't have to go to work today if you don't want to. You can do whatever you want to do. You feel me? Because the only reason why you're going to work is to make money, right? So if you've already made your goal, if you made money, you don't have to go to work, right? But of course, you still want to have that extra added income because the stock market is tricky. You never know. Like you might win today and lose it all tomorrow. You feel me? So definitely want to have a job. But yeah, that's pretty much how the earnings reaction strategy works. And it doesn't matter like if they beat earnings, if they missed earnings, it doesn't matter. Like you see they beat earnings, right? And they were dropping. That doesn't matter. You feel me? That doesn't mean expect for it to open up and break there and keep dropping. You feel me? Um, just the strategy is you take the break of whichever way it goes at the last 30-minute candle. You feel me? I don't care if this motherfucker fell 30 goddamn dollars and then that open started ripping the other way. You can sit there and say to yourself like, oh, I don't trust it because it's going up this way and pre-market it dropped and all that stuff like that. Yeah, you ain't got to trust it. You ain't got to. Because I am. And I'm going to take that $12 move. You feel me? While you sitting over there on your hands talking about, oh, I don't trust it because my emotions are telling me that it should be going down. Price didn't tell you that. Your emotions told you that. You feel me? So, it doesn't matter. If they beat earnings, if they miss earnings, if they drop in pre-market, if they rise in pre-market, you take the break of that 30-minute candle. But you still want to do your research, right? So what I like to do is I like to go to the daily. Like if I know that I'm trading HIMS tomorrow for an earnings reaction, the first thing I'm gonna do is I'm gonna go back and look at his last earnings reaction, right? And I want to see how it performed. Like, did the stock move? And if it did move, like, did the strategy work on it? So I'm back testing, right? So I'm looking at it and I'm like, okay, this was the day of earnings. Where did it close the day before? The day before it closed right there. Okay, cool. So it opened a little lower than where it had closed, and then it ran, right? And it literally did the same thing this time. It opened lower than where it closed on an earnings beat. You see, it closed up here, opened lower, and ran. You see, like, it's repeatable. It's an algorithm. You cannot convince me that there's the same amount of buyers and sellers as last time, this time. You feel me? It's price. That's why they say trade the same setups, because price will present the same setups over and over and over again, because it's a robot. It's not a person pressing buttons moving the stock market, and it's not somebody behind a screen looking at your order and hunting you down. That's not how it works. It's an algorithm, right? So it does the same thing over and over again. We open lower, ran. You feel me? So going back and looking at the previous earnings gives you good insight on what might happen on the next one. So for example, as well, I had Ford on the list for earnings as well, and I also had Tyson on the list. I had Datadog on the list. I had Palantir on the list. But the ones that I end up trading are the ones that I go back and look and back test and see like, okay, how did this one run last time? You feel what I'm saying? So like, for example, I think it was what, Monday? Yeah, Monday we had On Semiconductors and Tyson Chicken for earnings, right? I went with On. Why did I go with On? Because I went back in time and looked at Tyson's last earnings report, and I didn't like the way that it moved. It didn't really go with the strategy, but On did. So I traded On, and I showed y'all the trade. I did over 176% on that trade. You feel me? Could I still make money on Tyson? Yeah, because it still felt like $2 or $3. But I took the one that I back tested and saw what it did, and I saw that it fit the strategy. You feel me? So it's like I made it make sense. I didn't just wake up and just be like, "Oh, this is the one I want. I'm going with that one." Like, nah. That's why my name is strategic. You feel me? I move strategically with this. Like, there's a reason I'm doing what I'm doing. I'm not just waking up and getting lucky. Like, this is actual real data points, actual real strategies, and this is why I'm consistently profitable. I don't just wake up and get lucky. I've been doing this for 3 years, and I've been learning, right, and staying disciplined. So that's why I'm at the point that I'm at now and can find high percentage payout trades and stuff like that because I know what I'm doing. Um, so that's the ER strategy, pretty much in a nutshell. Did you have any questions about that? Oh no, actually, as a matter of fact, there's more that I want to add into that ER strategy as well. So also what I like to do, I like to go to unusual whales, right? All right. So when you go to unusual whales, you go to resources and then earnings calendar. You can still see my screen, right? Yeah. Okay. Cool. All right. So what I like to do is I go to the current date, right, which is this week right here. It'll show me all the earnings that's coming up for this week, right? And then I can organize them. So the ones that I want are the ones that have the highest open interest. You feel me? You see, they'll let you organize them with different categories. Like this one will show you like the ones that are supposed to have like the biggest move. You feel what I'm saying? But you can't predict that. You don't know. So I stay away from that. Stock volume, excuse me, I don't really care. You feel me? Like, okay, there's volume there. So what? That doesn't mean anything. It does mean that some people are looking at it and willing to trade it, but that doesn't mean that it's gonna move in one particular direction or another. I don't care, right? Options volume, there's gonna be a million and one people that are gonna want to gamble earnings. You feel me? So options volume doesn't even matter. You're gonna have people who just get into a trade just because they want to gamble and hope to win, right? Market cap doesn't matter. You feel me? Like again, like Hims went crazy this morning, ran $12. I don't even think Apple ran $12 for their earnings, and they have a way bigger market cap, so it doesn't matter, right? What does matter to me though is open interest. What open interest is telling me is that there are people who already have orders set for these underlying securities, right? Like they're already interested in opening positions on it, right? So if there's high open interest on it, that means there's a lot of people who are expecting this thing to perform very well for their earnings, right? So that's what I care about. So I want the ones with the highest open interest to be at the top because that means that these ones are the ones that people really want. And then check it out. You see On Semiconductors up there, you see TSN down there. Boom. So now you know that my back testing was 100% legit. You feel me? Because now even the data is showing me this was the better move to take than this one. You feel me? Remember, I just back tested it and saw that On worked better with the strategy than TSN. But then I came and checked the data, and the data was like, yeah, bro, you're right. There's way more open interest on than there is on Tyson. Why? Way more people want to trade this than this. They know something just like I know something, right? Maybe they back tested it too, right? And then you see this one right here, Hims was a little lower than Palantir and Ford. I know this, right? But sometimes, like, I might take like the top three out of the group, right? And then do my back testing as well to see which ones move better. I know Ford was bullshit last time. I know Palantir ran last time, you feel me? So that was one of them ones I could have added to the list. So Palantir and Hims would have been the two ones that I would have been looking at, you feel me? And on this day, On was the one that was all the way up here. Tyson wasn't even top three, you feel me? But again, you still could have made money on it because it still gave a $3 move, right? But this one gave the best move. Like this one moved like $6 and it's smaller and it costs less, right? So that was the better move. And then we got the rest of the week coming up. So um, tomorrow, pre-market, we got Uber. So that means you can trade Lyft, right? Like if Uber's too expensive at open, you could trade Lyft. It's gonna move the same exact way, right? Or you got what is that? I wouldn't even mess with gold. You feel me? That's more of a commodity type situation. I wouldn't even mess with that. You got Disney got earnings tomorrow, right? Is this you, Unilever? No, Unity. Okay. So the ones that I would be looking at for tomorrow, I'll be looking at Disney and Uber, but I would prioritize Uber over Disney, right? Why? Because there's way more open interest there, and it's cheaper, right? And so what I want to do, I want to back test it. I want to go and look and see how Uber moved, right? Last time for ER, and I want to go back and look and see how Disney moved for last ER, right? Whichever one moved better with the strategy, I'm taking that one. And if it's Uber that moved better with the strategy, that's extra confirmation because it has higher open interest on it. So now it's like a play that I would feel comfortable putting up a little extra money on because it's just like confirmation stacked on top of confirmation stacked on confirmation. You feel what I'm saying? Um, and yeah, you just do the same thing throughout the rest of the week. I love earning season because it's like the time where I can get up and trade at 9:30 and be done trading by 9:45, 10 o'clock. You feel me? And have made what somebody's gonna make for their whole day's worth of trading. You feel me? Like in 15, 30 minutes. You feel me? Like somebody's gonna trade all day long trying to get a 175% play. I did it in 15 minutes. You feel what I'm saying? That's just why I love earning season. But yeah, that's pretty much the ER strategy. Do you have any questions on that? Stop sharing my screen now. Stop sharing.
Probably could have missed it though. But did you explain to him, far as the gap moves? Because you could kind of play them gaps too, like if a gap up or gap down when it come. I mean, on the opening bell.
So what's the question?
Far as you were just talking about the earnings. So, did you explain? I said I could have missed it, but did you explain to them how to play the gaps on the
Oh,
earn?
nah. So I just wanted to go over the earnings reaction strategy, but me personally, I will throw that in there real quick. Just because you asked, I will show people how to trade the gaps on earnings.
Because that could get, it can be profitable, but it can get tricky too. You get what I'm saying with certain companies, because some might want to draw it all the way down. You know what I'm saying? So I think you could kind of explain that to them for a person who's looking at it and then may hear.
Your screen went mute once I started sharing the screen. Mute whenever you get a chance.
Did I,
I can hear
what's,
you now.
what's the last?
You were saying how it can get tricky trying to trade the gap because they could draw
Yeah,
down or something like that.
yeah.
Okay, so you can see my trading view screen or no? Okay, I think you can see it. Um, so the way that I would personally trade a gap, so let's see right here, like we have a bullish gap right here, right? Like we would need price to go up to fill that gap, right? Because that's where it did. It gapped. Well, price would have to come down to fill that gap, right? So this would be a bearish gap type situation. Like price gapped up, right? And now you're looking for price to come back down and fill it. So you're looking for price to be bearish, right? So what I would do is, since I'm bearish, I'm gonna take my fib retracement tool, excuse me, and connect it to where it gapped down from to the top down there of that candle, right? And now what I'm looking for is if I'm looking for this gap to be filled down here on the downside, it's like, okay, cool. Once we break into the gap, so this two down candle right here broke into the gap, right? Because from here to here is the gap, right? So once this candle right here broke the low of this candle, it was officially in the price gap, right? And then let's see. I like to mark out the 50% of the gap is super important, right? The top the middle, and the bottom, just like a fair value gap, is very important, right? You want to see how price reacts to these different areas in these gaps, right? So my first target would have been halfway through the gap. You feel me? Like if I'm trading the gap and I got in somewhere up here and I'm expecting price to take the gap, I mean to attack the gap, my first price target to get out would be right here at the halfway mark of that gap. You feel me? Because price may only fill half the gap before rejecting. You feel me? Like institutional traders look at levels like 50%, 61, 79. That's what the fib is for. You feel me? It's used like it's literally used for a reason, right? The 50% of anything always matters when it comes to trading. And you see what price did? It came down, it tapped that 50% and turned around and went right back up the other way. You feel me? And a lot of times, what'll happen is when there is a big gap like that, if the gap is bigger than 10%, the gap rarely gets filled within the same week. I'm not going over that though. That's a whole different situation. Like I don't want to get too deep into playing gaps. I definitely know how to play them in detail, but just to keep this video short, the 50% of it would have been a target for me, right? And take profit right there, get out of the trade. And my fault, I kind of lost track of my thought, but what I was about to say is a lot of times what will happen is price will manipulate into these gaps, right? And then go down and hit the 50 percenter and then turn around and go back the other way. Why does that happen? It's because the computer already knows and understands that humans are going to be excited about that gap. Like once price starts to attack that gap, you're going to get excited about it and you're going to think like I have a good chance of trading this trade and hitting my target, closing that gap down there. So a lot of people jump into shorts, right? Thinking that it's going to close the gap and it comes down halfway and rejects, and now all of those stop losses up there get swept. So that's liquidity now. They got turned into liquidity. The market basically fooled everybody into thinking that it's going one way and turns around and goes the other way. That's why they call retail traders dumb money, right? Because the dumb money got in right there, super happy thinking it's going short. The smart money were waiting and they were buying, right? And you have a buy stop up here because if you're short, you're selling, that means you have a buy stop, right? You get stopped, you buy yourself out of your position, right? Because you're selling, right? So if you're selling, right, and you got a buy stop up here, if smart money's buying down here, once they take you out, they just sold to you. You feel what I'm saying? When you get stopped out, when you close your trade and it's a buy stop, you're buying. For every buyer, there has to be a seller, right? So you're buying what smart money is selling. That's why they call us dumb money. When they're buying, we're selling. When they're selling, we're buying. Well, not me. You feel me? Like I think at this point I'm smart money too. But yeah, that's pretty much how I would trade a gap. I would draw a fib on it, pay attention to the top, the middle, and the bottom. First price target is always going to be the middle. See how price reacts to it. If it rejects and starts going the other way, I already got out anyway, so I'm not tripping. If it's slicing right through it like a hot knife through butter, I will probably hold it down to the bottom of it, get the gap completely filled. And yeah, that's pretty much that. Any question?
No, that's it. I just think that was a good one.
Okay. So we got two good videos that I'm gonna post them side by side in the Discord, right? And I think I'm gonna create a new channel in the Discord. Kind of want to delete the Zoom replays channel and create a strategies channel, but I think that might be a little too specific because there are gonna be some videos that don't cover a strategy, but that might cover trading psychology, that may cover something else. Okay, so you know what? I think I'm gonna just keep these in Zoom replays. Now, obviously, it won't be a Zoom replay, but I'll just rename the channel to replays. But I appreciate you for helping me host this class and asking questions, sharing your insight and things like that. If you have any questions, feel free to hit me in the Discord. Feel free to go back and watch this video. It's literally free for you to the rest free for you or to you. I guess both are valid for the rest of your life. You feel me? You got access to the Discord. Unless you piss me off, I'm gonna kick you out. It's like, but yeah, man, appreciate you for fucking with me on this shit. I'm about to get this stuff uploaded. Smoke me a little blunt. Give me a little. I definitely need it after all that motherfucking talking shit. My mouth dry as a motherfucker.
Hmm. Shit, go ahead, man. I tap in with you in the morning.
Alrighty, bro. All right, so
Tell me what you looking at. I see what I'm looking at.
you already know what I'm looking at. I'm
You
looking
know
at
how it go.
I'm looking at Uber and Disney, but you know tomorrow FOMC though. So for real, I probably don't trade the ER. I probably just wait till 2:30, save all my buying power, and catch that 400-500% moved in.
Right now is looking. They looking bullish just based off that state. You know how it been that China statement. What they supposed to be talking about. So right now they in the uproar. So you may like far as I would say the beginning of the day be good. If you know when it get around 1 o'clock, so you can get real lumpy.
Mm-hmm. I mean,
Yeah, so
so the thing
I think
about
get in, hop out, sit back, see what happened later on that day.
yeah, for sure. So, but I was gonna say like the thing about China right now is like I be what so I follow Bar Chart on Instagram. And it's another gym
Hmm.
too for y'all. It's at BARCHART, all one word.
I actually use bar charts. I use bar chart to kind of just look at certain levels for swings too,
Hell
like
yeah.
long swings.
Is it bar chart or is it quarter chart? Let me look on Instagram real quick. It might be quarter chart. It is quarter chart. Damn, that's my fault. So it's CU, not C, QUARTERCHART, all one word. Quarter chart. So show it right there. Y'all can see that.
But pointer for y'all bar chart, y'all be able to look at.
Yeah, bar chart is
But
lit
you
though.
can look at financials. You can look at all that other stuff too. So it's actually pretty good.
Yeah, that's one of them ones. There's a lot of different stocks that I used to. I mean, not stocks, but websites that I used to use to, navigate this
Hmm.
world. But damn, what was I just about to say? Oh yeah, Carter chart. They were talking about how China is facing like feeling the impacts of the tariffs as of now, right, rather than us. So because of the turnaround time that ships take to leave from China and get to the U.S. and from the U.S. back over to China, tariffs haven't really set in on us yet. You feel me? Because we haven't gotten anything shipped to us with the tariffs on it yet. You feel me? Like when the tariffs were imposed, like they were imposed at the beginning of April, right? Okay, so
Hmm.
they, once they got imposed, they didn't kick in until somewhere in like the middle of April. So once they actually kicked in, you got to go 30 days out from there because that's when the next shipments would arrive here with the tariff goods, right? So the U.S. hasn't actually felt the tariff inflation yet, but China's already feeling it because they're a manufacturing based economy, right? So
Right.
because they're sending out less, that means that they have less production at their factories. They're already making less stuff, sending out less stuff, less boats going out and stuff like that. So they're already losing employees. They're about to lose. I think they said 2 basis points on their GDP and stuff like that. So it's really in
Hmm.
China's best interest to make a deal with the U.S. But at the same time, we done seen Z like he's smart. You feel me? Like he might outsmart Trump again. You feel me in some kind of way. But tomorrow, I think that Jerome Powell, the real thing that you got to watch is like Trump been trying to get Jerome Powell to step down. He been trying to fire him and all that stuff like that. And remember when Trump first got on the scene for his second election, he was basically saying like, "I want rates cut immediately." And when it didn't happen, he started calling Powell all types of names and trying to get him to fire and stuff like that. But Powell said he's not going to step down, and then Trump turned around and started saying good stuff about him. You feel me? So it's almost like he's trying to get back on his good side. So for real, I think seeing the beef between them two play out is really gonna be the important thing tomorrow. Like listening for things tomorrow, like Jerome Powell talking about tariffs. Like if he says something about tariffs and how he can't cut rates because it's getting in the way or something like that. You feel me? You might see a sharp sell off. You feel what I'm saying? Because they know that Trump ain't gonna change his mind, and they know that Powell just basically putting it on him type shit. You feel me? So you can see a sharp sell off. Now if he get up there and he start talking nice about Trump and his plans and shit like that, you could boost and go crazy. But you never want to go off how you feel, but trade what you see.
Yeah, so we'll see how it go.
Either way, we making money tomorrow, though, right or right.
We definitely gonna make something tomorrow for sure.
I'm leaving with something. I'm leaving with something.
Yeah, yeah. I got snag something up.
I don't care if it's 25 cents. I'm leaving with something.
So yeah, man. I'm about to shut it down for the night.
Alrighty, bro. All right, hold on. Wait, let me end this recording first, so that way it
Go ahead.